Everyone tells you that real estate is about location, but here's what they're not telling you. The smartest investors aren't just picking locations anymore. They're using AI to predict which neighborhoods will explode in value before anyone else even notices. While your competition is still driving around neighborhoods taking notes on their clipboards, artificial intelligence can analyze thousands of data points across school districts, job growth, infrastructure development in seconds. What if the edge that you've been looking for isn't in your gut instinct or your decades of experience, but in teaching a machine to see patterns that human eyes just can't catch? Today's task is pretty simple. We're going to use AI to develop appreciation metrics for real estate properties so that you can figure out how you would expect a property's value to grow that go beyond just basic yield, how much cash you're getting in for every dollar you put out. This is valuable because while everyone can calculate immediate yield, the real wealth is built by identifying properties that will appreciate faster than the general market. And now AI can help us spot those opportunities before the crowd catches on. First, we're going to prompt Perplexity to design a custom research framework with 4 key metrics and data sources. Then we're going to run that framework through 3 different AI platforms, Perplexity, Gemini, and Claude, to see which one delivers the most actionable intelligence. A reward at the end is going to be a comparison spreadsheet that reveals hidden gems, properties with both strong immediate returns and high appreciation potential, and it'll do it more accurately than any human could by analyzing manually and cross-referencing dozens of data sources. And it'll do it in about 5% of the time that it would take even the smartest analyst to compile by hand. I'm Evan Goldstein. I'm a licensed professional engineer and a data scientist, and I'm building the AI Capitalist R&D channel to give you the tools you need to conquer the world of profit. Why don't I invest in the stock market? Technically, I actually do, I guess. I have the target retirement fund that takes some of my income, socks it away in standard indices, and is designed so that I don't have to think to let the money grow. But in reality, the stock market doesn't grow. If you look at metrics of buying, say, a bushel of wheat or a rail car full of corn in 1920, and then you were to sell that and then purchase stock in the Dow Jones Industrial Average, and then you fast forward to 2025 and you sold that more than 100 years later, you would have a rail car full of corn. It tracks with inflation. But really the reason I don't is because I don't have an edge in there. Everybody in the world wants to buy stocks because it's liquid, it's quick, it's easy. But because everybody in the world wants to do it, everyone in the world is applying all their knowledge at it. So I'm competing against hundreds of millions of other people who are sitting there writing their own algorithms, think they have their own special method of picking the right stock. My grandfather was a retired doctor. He used to bet on the stock market, and he would do day trading, and he would sit there timing it out, like when his finger would hit the mouse to buy and sell. And so he said it was like listening to the stethoscope when you're measuring someone's blood pressure as to when to exactly time out the pulse rate of the stock market. I don't have that kind of specialized knowledge. He did it pretty well, but I can't do that. My knowledge base is really in artificial intelligence. So what I want to do today is try to figure out how we could use AI to get a slight edge in decision-making for investing. And I like real estate, so we're going to look at some real estate and see if we could figure out a few metrics using AI to try to get ourselves a leg up on the competition the way that we wouldn't be able to in the stock market. When investing in real estate, at least the type of investing that I do is cash flow investing. So you want to buy a property that is set up in such a way that it's giving you revenue from the first day. So you don't buy in San Francisco, which is actually a lot like stock market investing, and it's more gambling. In appreciation investing, you put the money down, you may be paying in huge sums of money every month trying to keep this property going, while you hope that you get those double-digit returns where the prices went up 25% in a year. Now, I lived in the Bay Area when prices were going up $100,000 a year on houses, and people were like, I'm rich. And then 2008 happened, and they were poor. Not my thing. I like stability and returns, and that's a basis for how one would set up an investment. appreciation is important over the long run. And you can get lucky in cash flow investing if you invest in an area for cash flow that it turns out some company moves there, there's some improvement in the situation there, and then it starts to ramp up the prices faster than in the surrounding areas. So when we're comparing properties, and I prepared this spreadsheet previously on an earlier episode where we listed all the properties and we determined which ones had the best cash flow. Say you've narrowed it down to 2, and you want to figure out which one of these has the best shot at getting lucky. Let's try to put the work in where they say the harder I work, the luckier I get. Let's put in a little bit of work to try to get that luck going. So here we are at Perplexity, where all roads begin. I'm going to set up a prompt here. Now, Perplexity has a voice-to-text feature, a dictation feature. I installed Whisper, and it's free, and I find it just works a million times better. It gets your grammar right. It just does a much better job of transcribing. I'm going to prompt you with a series of addresses to use as an example. What I'm trying to do first off is figure out some metrics that I could develop based on data that can be collected from known sources, which can be used as a basis to try to home in on which properties have the best chance of appreciation. So this could be metrics like school district, like what has the appreciation been in the previous year up to this point, unemployment. Think of a few metrics like this, and then I want you to output for each metric. Tell me where the sources for the data can be found. Then I want you to output a prompt that could be inserted into a research agent. This prompt should say, give clear instructions on how a research agent would obtain and calculate these metrics, and then it would output them as 4 columns in a comma-separated value spreadsheet format where I could just copy it and then paste it directly into my spreadsheet in order to be able to compare real estate. All right, let's make that a project here. Off you go. And I'm using the deep research. This is a project within Perplexity. So this isn't just a standard question, and I believe this comes with a pro level subscription. And about 5 minutes later, we're done. So it came up with a description here of what it's doing. Property appreciation metrics is the first metric. The 4 key metrics that it came up with were school district quality, as we told it, and year-over-year change, and it found a data source for it. 2 is local unemployment rate and job growth trends. As we said, you don't want to buy where people are losing jobs, and you always look at the trend line. What's the vector? 3, look at population growth and migration. See, this is taken from the U.S. Census Bureau. Infrastructure Development and Compute Accessibility Score. That's important. That is number 4. And I came up with a prompt, gives me the input, output format for each metric. And the notes here saying only use real data, never fabricate. I'm finding that this is how you do this. There's this whole AI hallucination problem, but if you tell the AI, don't fabricate anything, don't hallucinate, it actually makes it much more honest. It seems to be that it's trying to please you. So it thinks you want to hear a response. And here's the thing that most people miss about AI hallucinations. It's not a bug, it's actually a feature that we can control. And if you're finding this video valuable so far, I would appreciate it if you'd hit the like button right now, because what comes next is where most people make their biggest mistake with AI research. If I'm writing a poem, if it says, I can't write this poem, then you're much less pleased than if it tries to write a poem that it fabricates, right? But in this case, because we're working with hard data, it needs to know in that internal reward structure that you will not be upset because it's trying to make you happy. You will not be upset if it does not fabricate and it just says data not available. Okay, now let's try to run this bad boy on a few different platforms. See what comes up. All right, so I've pasted this prompt that we developed earlier into Gemini, Perplexity, and Claude, all on deep research mode. Let's make sure this one's it's a Perplexity project in Claude. Yep, research mode is on. Now I'm going to come into my spreadsheet here. I'm just going to copy the addresses. Paste. Go. Gemini has won the speed race. It's put a spreadsheet here. Let's load the whole thing. Okay, Perplexity has come back to me with something I can download, a CSV. Brought it in here into my spreadsheet already. Okay, so these are obviously B and C neighborhoods because the schools are all below average. However, the way I would look at this, first thing, I'm going to come to my cash on cash return. How many dollars do I get out every year versus how much cash did I put in to buy the place? So the first thing I do is I sort cash on cash descending to try to get the highest value producers up at the top. The whole point of this exercise is that doesn't tell you everything. However, this is what we're trying to research, is what other metrics can we look at besides that to determine whether a property has potential to appreciate. Now, what's interesting here is the Perplexity, it seems to have done a county-wide search, so there's nothing to really compare. It doesn't get granular down into the neighborhood size. So there's nothing to differentiate any property from any other in this tight of space. But here's where it gets interesting. While Perplexity gave us county-level data, one of the other platforms went rogue in a completely unexpected way. Meanwhile, Claude got stuck. It has more questions. So what I want to do here, I'm going to tell Claude, I want you to create an index that's going to tell the total overall potential for appreciation based on the metrics that I've defined in my preliminary prompt, and then create a comparison spreadsheet that shows the data gathered for all of the properties so that I can look at them, make an apples to apples comparison. So just do it for the properties I provided you, and your output should be something that I can copy and paste into a spreadsheet. Now, Claude is telling me it has some questions. This is interesting. It's much more interactive. Okay, meanwhile, Google is done, and it's given me something that I can work with here. In this case, it's actually gone a step further, and it's developed its own indices. So, sort of 1 to 10 rating for several different categories, and then it came up with a key recommendation. As if I were to own this property, what would I do? Would I just strategic hold? Would I add yield, add value, or would I dump it? Okay, and meanwhile, Claude has output these lovely columns, or this CSV of its own assessment. Paste that in right here. And we see some of these have declining populations, but some have increasing. And that's reflected in these appreciation index. I told it to come up with its own metrics and its own way of doing it because I'm more interested in what the AI comes up with than what I waste my time spinning my wheels trying to figure out. So here's a fun fact. I just put the Claude data in here and I'm comparing it to the addresses I have here. Now check this out. This is exactly why you cannot trust AI blindly. The results I'm about to show you will shock you. It hallucinated most of the addresses. Suspect. It got 3 of the addresses right, and then the rest of them, it just completely hallucinated. All right, so we're going to stick, I guess the clear winner here is Gemini. What's interesting here is that there doesn't seem to be such a correlation between these data sets. So this is the goldmine moment, the insight that separates amateur investors from the ones who build real wealth. Watch what happens when we cross-reference these numbers. The cash-on-cash returns are not necessarily correlated heavily with the appreciation index. In other words, you can have your cake and eat it too. You can pick out the one with the highest cash-on-cash return, the highest immediate yield, and also, look at that, it still has a decent appreciation index. According to Gemini's research, it has a decent index of potential growth. And then you look at this 3.8, where this is not projected to grow. It's just middle of the pack here. So you can find the gems where you don't have to do as much of a trade-off between your potential yield and your potential risk or your future appreciations. And that's why you do these sort of analyses, to pick the winners. Because we're winners here at AI Capitalist. What have we learned from this AI experience? 4 things. First, multi-platform validation is essential. Running the same prompt through different AI systems can reveal the strengths and weaknesses and even the hallucinations that you would miss in a single platform. 2, prompt engineering is the new data analysis. By clearly instructing AI not to fabricate and to cite sources, we can dramatically reduce hallucinations and increase data reliability. And 3, AI excels at synthesis, not just search. These tools didn't just find data. They created custom indices They weighted multiple factors and they delivered actionable recommendations that would take human analysts days to compile. Number 4, speed creates competitive advantage. What took us minutes would have taken weeks of manual research across census data, school ratings, employment statistics, and infrastructure reports. So what's novel here that wasn't possible 6 months ago? The game changer is AI's ability to conduct deep research across disparate data sources, census databases, school district APIs, employment statistics, and then synthesize that information into custom comparative indices in real time. 6 months ago, you could ask AI to find information, but you couldn't ask it to look across a lot of different sources, cross-reference them, and then use its own internal judgments to build a whole scoring system like we did today. We're watching AI transition from a research assistant to a research analyst. Now, the pattern is clear here. Wherever you need to make complex decisions based on a lot of different data sources coming in, AI can now serve as your research analyst. It works at machine speed with human-like synthesis capabilities, but you have to watch it to make sure it doesn't go off the rails. If you want to implement these AI research strategies in your specific business or industry, visit aicapitalist.biz. I, Evan Goldstein, and I can provide you with even more customized and powerful AI systems tailored to your unique competitive challenges. Let's talk about how to give you an unfair advantage in your market.